Our guest on set, Devin Linus, founder and chief investment officer at Malayan Traders Capital, which has over 100 million ringgit in assets under management. It's nice that we just talked about F&B stocks there, Nestle and Dutch Lady. You have this strategy of buying at the bottom, buying at bargain prices, and you've recently invested into F&B companies in the US. What kind of bargains are you seeing there?
So what we saw in January is that the whole market was crashing because of oil price decline, because of iron ore price decline, and for some reason people thought people are going to stop eating. So when we saw, we compared McDonald's, KFC, Chipotle, all the guys, and what we realized is that all these F&B players' stock prices come down quite a bit. So now I can buy like a safe play, like you noticed Dutch Lady and Nestle, how they increased their earnings recently. Yeah, quite a lot actually. And we knew this was going to continue for the American F&B sector. So what we did is we compared all the peers to each other, compared all the restaurants, compared all the products, looked at the menu, and we saw one undervalued player that we knew was still going to grow at 30% per annum, as in their revenue. And so then we bought big into it in January.
So this is about sustainability as well as the cash that they have on their balance sheet.
Yes, it's a bit of both. So there's one thing, they're already making cash flows all the time, and the next thing is about growth. And F&B is a growth sector, especially US food. Just give an example, if anybody been in New York, there's a store called Shake Shack.
Oh yeah,
it's
absolutely.
listed. Not to say that we bought that store, but you can notice it's growing. So there are many players that are growing in the US and growing into Asia soon.
All right, looking at McDonald's as an example, they're really going through their paces in Japan, but this is something that doesn't shake you when it comes to dependable food place.
I think the beauty about these F&B, this global F&B type of companies, is that the ability of them to pivot. So like if you go to McDonald's and you go to India, they're serving, like, if I'm not mistaken, like some chapati type of burger. If you go to Japan, they're putting like teriyaki burger. So they have this ability to constantly innovate on the type of products they're having. So this is all just short term. If you look over the last 10 years, Coca-Cola, McDonald's, they've always over time been growing. McDonald's, of course, is a 5% growth type company. Shake Shack is probably a 30% growth type company.
So much are you allocating to the F&B space? Before this, you were telling us about your agriculture and resources play when you were last on show.
Yeah, so the thing is, we look at value, and the F&B, it's always the darling stock in the market. Same like Nestle, same like Dutch Lady. So it's very hard for us to buy into it. And when we see this opportunity, these big stock market crashes like we experienced in October last year or January this year, that we saw opportunity to finally get into F&B where we wanted to get in for years, but we couldn't get in before because it's so expensive. So now it's cheap. So we basically pick the best guy when the whole market's down.
And you're seeing a recovery of sorts in the market space.
Yeah, well, what we see is we see a U-shaped recovery. We see, as you can observe from since January, I think when I came last on the show, we were talking in Chinese New Year, talking about Year of the Monkey, and it's good for a bull. I'm a bull. And the market's a bull now. So the stock market has come up quite a bit. All prices, the Brent was around 30, now it's like 45. Iron ore prices, I can't remember the exact number, but it's up. Same with palm oil prices, it's up. So we're seeing that volatility, but we're at that U, and it's just a matter of time before China has not gone bankrupt. If it had gone bankrupt, but it hasn't. So that means that it's at the bottom, and it's just waiting for everything to consolidate and pick up again.
Well, you are a long-term bull when it comes to agriculture and food, and Wilmar, you're seeing that it still hasn't hit a historical high. So what would be the upside catalyst for a play like that?
Yeah, so like if you looked at it in January, and we were talking about it in the last time I was here, and that the stock price then was around $2 and around $2.60 to $2.80. Now the stock price is $3.50. So there's already like a 20-30% increase in the value of the stock, but it's still below its all-time high, which is around